Welcome to a Deep Dive. This is TalkTickers, and today we're slicing through the latest earnings call from Intuitive Machines.
That's right. We're looking at their first quarter 2025 results.
And their outlook for the rest of the year. We've dug into the materials you sent over.
Yep, gone through the presentation, the commentary.
Our goal here is simple. Cut the corporate speak, pull out the key insights for you. What did you actually hear?
Exactly. These calls have tons of info, lots of jargon. We're here to sort of translate it. What really matters about their financials, their operations, and, where they're headed.
Okay, great. Let's dive right in then. Headline numbers for Q1. What did they report?
Okay, top line revenue, $62.5 million.
$62.5 million. How does that stack up against, say, last quarter, Q4?
It's up a pretty solid 14% jump sequentially from Q4 2024.
Okay, 14%. What drove that increase?
Well, they pointed mainly to good execution on some key programs, specifically the COPS contracts, that's the commercial lunar payloads, also the LTV work, lunar terrain vehicles, and their Near Space Network Services contract, NSNS. They also called out the OSAM program contribution.
OSAM on orbit services.
Yeah, assembly and manufacturing. That brought in about $21.7 million this quarter, so a decent chunk.
Got it. So sequential growth is definitely positive, but the real story is often deeper in the financials. How did profitability look? Gross profit.
This was actually a really strong point. Gross profit hit $6.7 million.
Okay, $6.7 million versus what in Q4?
Get this, it was only $0.7 million in Q4. So a big improvement.
Wow, okay.
And maybe more importantly, this is the third quarter in a row they've posted positive gross margins.
Third quarter, so that suggests something systemic is changing?
It points towards, better efficiency in how they're running these programs and maybe a focus on picking up services or projects with better margins built in.
Makes sense. Now, SGNA, the overhead sales, general admin costs, that ticked up a bit, right?
It did. Went from $13.5 million last quarter up to $16.1 million.
Quite the increase there.
That's actually pretty typical for Q1 for a lot of companies.
Right.
You often see annual costs hit the books, then things like incentive payouts, stock compensation expenses.
Oh, okay. So more timing than a fundamental cost creep.
Seems like it.
Yeah.
Less about their underlying cost structure suddenly ballooning, more about when those annual items land on the P&L.
Okay. So even with higher SG&A, the operating loss actually got smaller.
It did. Improved from a $13.4 million loss last quarter down to a $10.1 million loss this time.
And that's really down to the better gross profit flowing through?
Directly, yeah. It shows those efficiency gains or margin improvements we talked about were strong enough to more than cover that Q1 SG&A bump.
Right.
And still improve the operating line. It's, worth remembering Q1 last year, 2024, had those IM1 success payments in it.
Ah, good point. So year over year isn't quite apples to apples.
Exactly. But looking quarter over quarter, the trend is definitely heading in the right direction.
Okay. Adjusted EBITDA. That's a number lots of folks track.
Still negative, but improved. It was negative $6.6 million.
And that's better than Q4?
Yep. About a $4.6 million improvement from Q4's number. And they stuck to their targets here.
Which were? Remind us.
They're still aiming for positive run rate adjusted EBITDA by Q4 of this year, 2025.
Meaning profitable on that basis by the end of the year?
On a quarterly run rate basis, yeah.
Yep.
And then positive adjusted EBITDA for the full year 2026.
Okay, targets intact. Now, another big highlight, maybe surprising to some, was free cash flow. It was positive.
It was positive $13.3 million in Q1, which is, pretty impressive.
How did they manage that?
Well, operating cash flow was strong at $19.4 million. Then they spent $6.1 million on CapEx.
Okay.
The positive flow was mainly driven by the timing of milestone payments. They got paid for work on IM3, IM4, and the LTV contract.
Ah, the timing factor again.
Exactly. And the improved gross margins helped too, of course. They were careful to say, look, cash flow will still bounce around quarter to quarter based on when these big payments land.
Sure, that's the nature of project work.
Right. But they believe the long-term trend is positive as these programs mature and start generating more consistent revenue.
You mentioned CapEx, $6.1 million, mostly for their first data satellite.
That's what they said, yeah. Primarily for the first lunar data relay satellite.
And should we expect more spending there? They're building a constellation, right?
Absolutely. The plan is for 5 satellites around the moon, plus all the ground network stuff needed for that NSNS program. So, expect continued CapEx for that build-out.
But the idea is the NSNS revenue offsets that eventually.
That's the plan. They expect those higher margin, hopefully recurring revenues from NSNS to ramp up and help cover those investments down the line.
Okay. Now, maybe the biggest number that jumped out, the cash balance. It just exploded, right?
Yeah, it shot up significantly. Ended the quarter at $373.3 million.
$373 million in cash.
Yeah.
Where did that come from?
The biggest chunk was from warrant redemptions.
Ah, the $1.50 strike price warrant.
Exactly. Holders exercise those, bringing in about $148 million in cash. Combine that with the positive free cash flow they generated in the quarter, and bam, you get that big cash balance. And they made a point of saying all those $1.50 warrants are gone now. None outstanding.
They also opened a credit line, $40 million.
They did. A $40 million revolving credit facility. It's currently unused.
So just for flexibility.
Yeah, they called it a tool for smoothing working capital. Given the milestone payments, sometimes costs come before cash. This gives them a buffer if needed.
So between the cash and the unused line, they have access to over $400 million.
That's right. Over $400 million in total capital available. And crucially, they stressed zero debt.
Zero debt. That's a strong position.
They certainly think so. Puts them in a good spot for operations and, future opportunities.
Okay, one slightly less positive number, maybe. Contracted backlog dipped a bit, down to $272 million.
Yeah, $272.3 million, down from about $328 million at the end of Q4.
Is that a word?
Not necessarily. It reflects them actually doing the work they were contracted for in 2024. They're burning through that backlog and turning it into revenue.
Right. Backlog isn't useful if it just sits there.
Exactly. But they also pointed to several new awards they got after Q1 ended. Those will hit the Q2 backlog number.
Like what?
An $18 million task order for NSNS, a $10 million grant from the Texas Space Commission for their Earth reentry vehicle.
Come back to that one.
And a letter contract for an orbital transfer vehicle, OTV. Starts at up to $3 million, but is part of an expected $11 million Phase 2 deal. So new stuff is coming in.
And how fast do they expect to convert the current backlog into revenue?
They gave some guidance there. About 45% to 50% of the Q1 ending backlog should become revenue this year in 2025.
Okay, roughly half this year.
Then another 25% to 30% in 2026, and the rest after that. And importantly, they reiterated their full year 2025 revenue guidance.
Still $250 to $300 million.
Yep, still $250 to $300 million for this year. And still sticking by those profitability targets we mentioned, positive run rate adjusted EBITDA by Q4 25, positive for the full year 26.
Okay, solid financial picture, strong cash position, targets reaffirmed. Let's shift gears to operations and strategy. It really sounds like diversification is a major theme now, moving beyond just NASA moon deliveries.
Oh, absolutely. That came through loud and clear.
Right.
They're trying to leverage everything they've learned from the lunar missions, the landing tech, operating in tough places, and apply it to new markets.
And they feel the timing is right, politically, budget-wise.
Seems so. They talked about the current federal environment, how the administration seems focused on grabbing emerging tech, leaning more on private companies for innovation.
Right.
They feel like key appointments, budget directions at NASA and DoD kind of align with what they offer.
You mentioned DoD. That's Department of Defense, a big potential customer base.
Huge potential, yeah. They noted the House Armed Services Committee pushing forward a big package for DoD space stuff. That gives them more visibility for opportunities, not just civil space with NASA, but national security space too.
Which fits right into that diversification push.
Perfectly.
But Artemis and NASA, that's still the foundation, right?
Oh, for sure. They see Artemis as the stepping stone. Tech they develop for CLPS, for LTVs, that's useful for the moon now, maybe Mars later.
Okay.
They stressed alignment with national priorities. And even though there's chatter about potential science budget cuts at NASA, they feel pretty confident about the core exploration programs they're plugged into.
They even testified about the CLTS model itself.
Yeah, before a House subcommittee. Basically, we indicates that this commercial approach drives innovation, helps lower costs, and sets the stage for other government agencies to buy services this way too.
Okay, let's dig into some of those specific diversification plays. NSNS Near Space Network Services. Seems pretty central.
It really does. That's about building the comms and nav network around the moon for NASA. They hit a key milestone in Q1, which let them book $3 million in revenue.
Right.
And then they got that extra $18 million task order after the quarter ended for work this summer. But here's the interesting part.
Beyond NASA.
Exactly. They're talking to national security space folks about putting their payloads on these lunar data relay satellites too.
So the constellation isn't just a NASA thing.
No, and that's really key to the strategy. It's designed for secure, continuous comms and nav command and control positioning for multiple customers around the moon.
Infrastructure.
Foundational infrastructure.
Yeah.
And designed to generate those higher margin recurring revenues they keep talking about. First satellite goes up with IM-3 in the first half of 2026.
And lunar data analytics, how does that fit?
Think of it as the software and data layer on top of the hardware. They already manage data from things like the LRO camera.
Lunar Reconnaissance Orbiter.
Right. They hold this massive repository of U.S. lunar images and maps. So they plan to combine that super detailed mapping data with the real-time positioning and relay info from their NSNS satellites.
To create, what, like a lunar GPS?
Essentially, yeah. A lunar navigation operating system.
Yeah.
That allows for really precise mapping, figuring out safe roads, coordinating surface ops for, rovers, landers, eventually astronauts, for anyone operating there.
Okay, powerful capability. What about moving off the moon? The orbital transfer vehicle, the re-entry vehicle?
Yeah, they mentioned progress on the OTV and also a stealth satellite program in Q1. The OTV is cool because it uses their lunar lander tech.
How so?
Instead of landing, it basically acts like a space tug, taking payloads from one orbit to another. They've started phase 2 work on that under the letter contract with a government customer. Full scope expected soon.
And the Earth re-entry vehicle, Zephyr, that sounds totally new.
It is. And it's a really ambitious piece of their long-term puzzle. End-to-end services. Take stuff to the moon, operate it in space, and then bring things back precisely.
And they got funding for that.
Just got that $10 million grant from the Texas Space Commission to push development faster.
How is their re-entry different from, say, splashing down a capsule?
It's a totally different approach. Most capsules are ballistic. They just kind of fall, maybe with parachutes, land hard, often in water. Zephyr uses a unique shape, a lifting body.
Lifting body, like the space shuttle.
Kind of, yeah.
Yeah.
It generates aerodynamic lift as it comes through the atmosphere. That gives it way more control. It can fly cross-range, adjust its landing spot. They're aiming for accuracy within like 50 meters.
Pinpoint landing.
And critically, a soft touchdown. Around 3 Gs, they said. Much gentler than a ballistic landing.
Why does soft and precise matter so much?
Think sensitive cargo, biological samples from space, maybe pharmaceuticals made in microgravity, delicate electronics. It's not just Moon or Mars sample return, though it enables that. It opens up commercial possibilities for in-space manufacturing. Research labs that need to get delicate products back to specific places on Earth safely. They see this Texas money as seed funding to attract commercial partners, like biopharma and more government interest. They mentioned a partnership already with a company called Boreon for microgravity uses.
Okay, that's a big potential market. And nuclear propulsion, seriously.
Yep, they're wrapping up phase 1 of a contract with the Air Force Research Lab project named Jetson, looking at low-power nuclear electric propulsion.
Instead of solar panels.
Exactly. The idea is you could replace bulky, visible solar arrays. Allows for smaller, potentially stealthier satellites that still have plenty of power, anytime, anywhere, not dependent on sunlight.
Interesting.
They're the only contractor on this phase 1, and they expect a follow-on option later this year. Builds on their earlier nuclear fission work for lunar surface power, too.
They also did a study for the Space Force on moving satellite servicing to geostationary orbit.
Finished that study, yeah. Again, fits the diversification theme, tapping into national security space, anticipating DoD budget growth there in 26. They expect the government to decide on next steps for OSAM, maybe including a GEO element later this quarter.
Okay, let's pull back to the moon missions. IM-2 landed in Q1.
It did. Landed way down south, further than anyone before. Super challenging place mountains, crazy low-angle sun.
But the mission ended early.
It did, due to a landing anomaly.
Oh.
But crucially, they did gather operational data from that unique environment before it ended. Data nobody else has.
And they were pretty open about what went wrong.
Very. Did a full review, internal and external experts. Found 3 main things contributed.
Okay, what were they?
First, interference with the laser altimeter signal noise or distortion in that weird South Pole lighting. Second, just the extreme terrain and lighting itself messed with the precision navigation. And third, the crater recognition system wasn't tuned right for the low altitude and specific lighting. It relied on LRO maps that weren't quite ground truth accurate there.
So what are they doing about it for IM-3?
Specific fixes. They're adding different kinds of altimeters, dissimilar redundant ones, and testing them way more rigorously. They're adding another sensor for surface velocity that doesn't depend on lighting. They're beefing up the onboard crater database they use for navigation.
And using the IM2 data.
Critically, yes.
Yeah.
Feeding all that unique flight data from IM2's South Pole, landing directly into their machine learning algorithms, training the system to handle those extreme conditions better.
Learning fast, fixing fast.
That was in the message. Learn, fix, move forward, smarter. And IM3 itself is still on schedule for its landing site, Reiner Gamma, which is mid-latitude, less extreme.
Okay. Beyond the landers, they're working on infrastructure too. Logistics and mobility.
Yeah, NASA gave them a $2.5 million contract back in January to help map out the whole Moon to Mars architecture, focusing on how you handle cargo, offload it, move it around on the surface. That work uses concepts from their LTV and heavy cargo lander designs.
How's the LTV, the rover contract, progressing?
Making good strides, they said. Finished the preliminary design review, that's a key step. And they did human testing with astronauts at Johnson Space Center.
Astronaut feedback.
Yeah, and apparently made changes to the vehicle based on what the astronauts said. They also put scanning LIDAR on a prototype rover here on Earth, showed NASA autonomous driving capabilities, and they've got this high-fidelity simulator running that mimics lunar gravity digitally.
Sounds like they're pushing hard before the next phase selection.
They definitely feel those technical milestones give them an edge.
And their own heavy cargo lander design, Novatune.
Advancing that too. They highlighted integrating their own datacom system into it, built off the NSNS tech, so the lander itself can talk directly to Earth or relay through the lunar network seamlessly.
An integrated offering.
Right. They see that data piece as a differentiator versus just dropping off cargo.
What's the timing on the next LTV award, that big follow-on contract?
Still looks like end of 2025 for the award. They said NASA sent out the second draft RFP, responses due soon, award later this year. And an interesting tidbit, NASA might actually award more than one follow-on. Maybe one company gets the full demo mission, but they might carry a second company through the next design phase, CDR.
Hedging their bets, maybe?
Could be. They also pointed out their LTV delivery plan uses a Falcon 9 Heavy, not dependent on SLS.
Good point. What about budget uncertainty? Like a continuing resolution, a CR, next year?
Their take was they'd likely be okay. Most of their work is on existing funded programs, not brand new starts that a CR would typically delay. They're watching how any reconciliation bill might affect DoD budgets, though, for those future opportunities.
One last operational item, the IM2 success payments. They didn't come through in Q1.
Right. About $14 million in revenue tied to those that they couldn't book yet. They now expect about half of that in Q2, maybe some slips into Q3.
Why the delay?
Just the complexity of closing out contracts with lots of different customers at NASA, different directorates, different processes, plus commercial customers too. But they sounded confident it's coming, based on talks with NASA.
Got it. And finally, M&A strategy. Mergers and acquisitions.
They called their approach opportunistic, looking for deals that add capabilities, give them an edge, maybe shore up unique skills, or help them get new revenue streams faster in their main program areas.
Needs to make sense financially.
Yeah, emphasize accretive, deals ones that add value, and it has to align with their three pillars: delivery services, data services, infrastructure services.
Okay. So let's try to pull this all together. If you had to summarize the key takeaways, the big themes from this call for our listeners, what would they be?
Okay, first big one is that strategic pivot. They're clearly using lunar landing as a launch pad to get into other areas, national security, in orbit services like GEO, even completely new stuff like reentry. It's diversification in action.
Right, leveraging that core capability.
Second, NSNS isn't just another contract. It's foundational. It's about building recurring high-margin revenue, yes, but also about establishing that critical lunar infrastructure, that navigation operating system. It enables a lot more.
Makes sense. What else?
Third, the IM2 learning cycle. They were open about the failure, but more importantly, they showed specific fixes based on unique data they gathered. That rapid learning in a tough environment, that's valuable proprietary knowledge. It shows they can adapt.
Okay.
Fourth, things like LTVs and the Zephyr reentry vehicle aren't just contracts, they're strategic building blocks. LTVs for future human exploration, Zephyr for potentially huge commercial markets like microgravity manufacturing and sample return. Positioning for the future.
And finally,
the balance sheet. That huge cash pile, no debt. The credit line, it gives them immense flexibility. They can fund the satellite build-out organically, and they have the dry powder to make a strategic acquisition if the right one comes along.
so the narrative they're pushing is, we started with lunar delivery, now we're becoming a broad space infrastructure and data company.
That sums it up pretty well, yeah. using the moon as the springboard.
Yeah.
And you can see potential catalysts coming up, more CLPS awards, that LTV Phase 2 decision, maybe news on Jetson or OTV, the OSAM-GEO decision, and just getting that IM2 cash in the door in Q2.
Yep. Okay. It's that time, our not financial advice segment. Let me stress, this is purely for discussion, entertainment, maybe sparking an idea for your own research. Absolutely talk to a professional before making any investment moves.
Couldn't agree more. Critical disclaimer stated. So with that in mind, if we were just spitballing some, outrageous but plausible trade ideas based only on what we heard on this call.
Go on.
Idea 1, maybe a long position in IM, perhaps paired short against a competitor you think lacks their specific capabilities. Maybe someone without a clear path to soft precision reentry or without their own lunar comms network plans.
Rationale being?
Strong cash, clear potential contract pipeline like LTV, demonstrated rapid learning from failures which yields unique data, and these differentiated capabilities like Zephyr and NSNS addressing multiple markets. Maybe the market isn't fully valuing that operational feedback loop or the infrastructure play yet.
Okay, interesting angle. Idea 2.
Idea 2 is simpler, focused on the capital structure. With $373 million cash, no debt. What do they do with it long term? Organic growth is priority 1? Sure. But if cash keeps building and the right M&A isn't there, could you eventually see a special dividend, a buyback? Or, more likely based on their comments, are they gearing up for a really significant value-adding acquisition?
So speculating on capital allocation?
Exactly. Less about today's operations, more about the potential value unlocked from that fortress balance sheet. Again, purely speculative, lots of risks, execution, funding, market swings. Do your homework.
Absolutely. Fascinating ideas strictly for intellectual exploration. So quick recap. Strong Q1 financials, improving margins, positive cash flow, huge cash balance now. Operationally, progress on lunar stuff, but big focus on diversification, NSNS, reentry, OTVs, nuclear tech. And they were clear about learning from IM2 and applying fixes for IM3.
Yeah, the main story is that strategic shift, building out from lunar delivery to become a wider space infrastructure and data player across different orbits and missions.
This has been our deep dive on intuitive machines. And remember, none of this was financial advice.
And maybe one final thought to leave you with. We talked about the changing federal landscape, the push for commercial space solutions. Given the speed and, frankly, the cost points demonstrated in some of these commercial lunar efforts, could this model fundamentally change how all government space programs, NASA, DoD, others, buy capabilities in the future? Not just for the moon, but across the board.
That's a big question. Could really reshape the entire industry. Something for you to definitely think about. Thanks for joining us on this deep dive. Keep learning, keep exploring.